Yes, welcome back everybody to Altcoin Daily. My name's Austin. If you hold altcoins, or if you're thinking about investing in altcoins, I have new information, data that you should see before you invest, as well as a few pieces of altcoin news, including a major token unlock, which could have major effects going forward. So like always, check the timestamps down below, support the content, and let's jump in first looking at the data for ETH. Since September 11th, never forget, Ethereum billionaire whale addresses holding 1 million or more ETH have collectively added 3.5 million more coins. This has increased their cumulative bags by another 14%. There are currently 132 such addresses in existence. So this is that chart showing since the Ethereum merge, these billionaire whales have just added to their stack. And whether this metric is either bullish or bearish, what this data won't tell you is that these billionaire whale addresses are most likely exchanges. And this makes sense, because since the Ethereum merge, ETH's price is in the green, the price of Ethereum has gone down and stayed stagnant, which does sort of make sense if people are putting their coins selling back to exchanges. Yet, this latest data with Bitcoin is very different. Bitcoin saw a massive surge of coins moving off exchanges yesterday, its largest daily amount, over 40,000 Bitcoin in 4 months. The supply of coins on exchanges is now down 8.48%, and in simplistic terms, this does mean it de-risks the chance of a future sell-off. And yes, you need to transfer coins on exchanges in the vast majority of cases to sell, and if now more coins are being taken off, that is a bullish metric. So here is that chart of Bitcoin over the last 6 months. Bitcoin's price is in green. These last 6 months, Bitcoin's price has only gone down. Yet looking at the yellow, this is BTC on exchanges. That is provably trending down as well, with the largest outflow for the last multiple months just again happening on October 18th. Now, what does this mean to you and me as crypto holders? The further this goes down, the further this does de-risk the sell pressure. We see metrics like this towards the end of a bear market. As Bitcoin's price goes down, more and more people are less interested in selling. Does not mean that it still isn't possible to drop lower in the short term. Nobody can see the future. But it does mean less and less people are willing to sell right now. That's interesting. Now that is in contrast to some of these altcoins. For Axie Infinity, almost 8% of the total Axie supply owned by insiders and early investors will be unlocked on October 24th. This is part of their vesting schedule. And just to get ultra specific, some 21.5 million tokens, almost 8% of the total supply, will be freed up when the vesting period expires in a few days. Now, what is a vesting period? A vesting period is when early investors and insiders are required to hold their investments for a minimum period of time, partly so they can't cash out right away just as new investors arrive. When the vesting period expires, holdings become unlocked and investors can sell. Doesn't mean they will sell, but it means they've been forced to hold this long, and many people cash out, not all of it, but maybe 10% or 50%. They just have that option. And who specifically are these insiders? According to token unlocks, almost half of the soon-to-be unlocked Axie tokens will go to members of the development team, advisors of the project, early investors in the private sale, and these holders, in theory, may decide to realize profits and sell tokens. So that'll be half of the people now getting their tokens unlocked. The other half, some 11 million tokens, are dedicated towards future staking rewards, play-to-earn rewards, and ecosystem funds. These tokens will not be issued to circulation immediately, according to leadership. So about half will be used for future staking rewards, will not be sold on the market right away. The other half, time will tell. This is going to be big for Ethereum. Ethereum launches testnet to begin work on their Shanghai upgrade. So now that we have had a successful merge, this is what's next for Ethereum. The Ethereum Foundation on Friday announced the launch of a pre-Shanghai testnet called Shandong, which will serve as a testing ground for numerous EIPs, Ethereum Improvement Proposals. So what will these upgrades be, and when exactly, roughly, is this happening? Shanghai is expected to be launched by September 2023 at the latest, so plenty of time, though a firm timeline has not yet been agreed upon among Ethereum's core developers. So while we don't know the exact basket of EIPs that will be included in the Shanghai upgrade, perhaps the biggest ticket update most likely to be included in Shanghai is EIP 4895, which would allow individuals and entities that hold staked ETH with Ethereum to withdraw it. Because right now, post-merge, people could deposit their Ethereum, stake their ETH in the ETH 2.0 contract. But right now, people can't withdraw. That deposited or staked ETH is currently immovable. This EIP would change that, and it looks like this is coming in about a year from now at the latest. Now looking at Voyager users, FTX's recovery plan could reimburse 72% of Voyager users' funds. So we know that Voyager went insolvent, went bankrupt, and all their users never got their funds back. It appears that FTX is offering a recovery plan, and all this is according to Bloomberg. And the only thing halting this right now is the judge. This deal, however, can't be completed until U.S. bankruptcy judge Michael E. Wiles approves Voyager's bankruptcy payout plan, which reportedly may be considered in December. So close, yet so far. Hopefully this happens before December. Yet before approving this arrangement, Wiles has insisted that Voyager should include the so-called fiduciary out, a standard bankruptcy clause that allows a company under court protection to consider higher bids before a sale is declared final. So essentially, they, still have to dot some I's, cross some T's, but for those who had their money in Voyager, there is still hope. And next piece of Terra Luna news from Kwon. Terra co-founder Kwon says he's still not on the run. So I guess he hasn't been arrested. In fact, he's still doing press. From a recent episode of Lorishin's podcast, he says he insists that Terra was a massive market failure, but not a scam. And he still wants to build other stuff.
One of the things that I hope the next few years would clarify is what happened with Terra was, it wasn't a scam, like it wasn't a fraud, right? It was a massive market failure. But I think one of the things I want to clarify is I believed in the need and the viability for decentralized algorithmic stablecoins more than anyone else. And as founders, we sometimes have a bias, and in some cases, erroneous bias for being bullish, right? So a lot of people say that I'm an idiot for, buying Bitcoin right before it was about to crash or something like that. But dispositionally speaking, isn't crypto made better, or any industry made better, if there are people that just a little bit believe in things and is more optimistic than other people about how things are going to pan out and how things are going to work?
Wow, the ego on this guy. And for me, the issue wasn't so much that a project failed, because in a way that's the sort of risk you undertake when you invest in crypto. This whole space is very risky. My issue back then was how blindly confident he was, tweeting at people that the project was fine when it was clearly failing, encouraging people to hold trust in this project, even though it was just days away from collapse. And if you're interested in learning more about cryptocurrency, click subscribe. We drop a video every single day demystifying the crypto market. See you tomorrow.